Good afternoon, and welcome to this week's market update. Markets pulled back last week as investors reacted to rising oil prices and mixed economic data. The Dow Jones Industrial Average fell by 3%. The S&P 500 dropped 2%, and the Nasdaq declined 1.2%. One of the main drivers was a spike in oil prices following conflict involving Iran. Higher oil prices can push up costs for transportation and production, which can eventually lead to inflation, meaning prices rising across the economy. That said, history shows that geopolitical events like this often create short-term market volatility, but don't always have lasting effects on markets, and sometimes even create opportunities for long-term investors. At the same time, the February payroll report came in weaker than expected, showing 92,000 jobs lost instead of the expected gain of 55,000. Despite the disappointment, the unemployment rate remained relatively low at 4.4%. The focus now turns to important economic reports that could shape market expectations. The Consumer Price Index is due out Wednesday. CPI measures how quickly prices are rising for everyday goods and services and is one of the main gauges of inflation the Federal Reserve watches when setting interest rates. With oil prices still elevated, concerns about inflation have increased, which could make the Fed less likely to cut rates this year. However, the weak jobs report slightly increased expectations for potential rate cuts, showing how markets are currently balancing slower economic growth with ongoing inflation pressures. For now, even with higher oil prices, the risk of a near-term recession still appears relatively low. Thanks for taking the time to tune in, and have a great week.